All right, let's go over crude oil. All right, so what we want to do is this. You can see this is a great setup. We got rolling here. Look at the positive market delta. So what we want to do is let's look at the white chart right here, how this thing set this up. This is called the J signal chart, okay? My methodology is very, very simple. It's worked for 31 years in the market. I'm letting market profile set my trade up by breaking inside or outside of value, high value or low value. Here's high value, red. Green on my white chart is low value. We'll go over the black charts in a second. Had a buy signal set up on that too. So we let value break outside or inside up first, and then we look for the first retracement. Now, it's called an ABC pattern. See how we broke outside of high value, retested high value. There's my blue Fibonacci dots that start firing. Now, you don't buy when the blue Fibonacci dots start coming up. You will look at the market delta, which is over here. As you can see, the market delta was red coming down into the break on the retest. There's my retest. It's retesting. Once you get the retracement and those blue Fibonacci dots, you want to look for an order imbalance. We have this market delta that looks inside of the market. Okay?
Order
The
canceled.
bid and the ask. It's showing the buyers versus the overall buy side versus the sell side in the market. So what you can see, when the blue Fibonacci dots, the market profile sets a trade up first, then we get the retracement, and right there's your buy side, and there's your buy Fibonacci dots. When those blue dots start firing off, we do not buy right there. We let the market pull us in. We don't tell the market what to do. We let the market tell us what to do, because the setup has worked for 31 years. Continues to work today on all markets. Works on all futures, all stocks, FOREX also, and currency markets. You break outside a high value, that sets a trade up. You retest high value, there's your blue Fibonacci dots. Now I want a positive market delta. Now what I've done, we have a proprietary Renko bar. We don't trade minute charts on market delta. I think they're worthless on minute. We don't trade range on market delta. I think those are worthless. I don't trade volume. I think those are worthless. I have a proprietary Renko bar that I trade the market delta with because it's very smooth. Look at that. Look how smooth this thing is. Green all the way up. Buyers all the way up. Look how we have buyers all the way up. Very smooth looking at the inside the market. So what you do when you get the blue Fibonacci dot, you look for 150 or you look for a green market delta. Good job, Kevin. Nice job, man. You look for a positive market delta. Once you get a positive market delta, now I like to have over 200, but I don't have to have over 200. I like to see over 200. That's a major imbalance on crude oil. I only use my 5-sim Renko. I don't use any other Renko bar on crude oil. 5-sim Renko, 4-sim on the S&P 500. I love the 5-sim here. So 158 is my buy signal. Once that closes, you can place your stop. You want to have a hard catastrophic stop of 15 ticks. Remember, crude oil is 100 ticks per dollar barrel. So you have $1,000
order canceled.
Win or loss per dollar barrel. So what we want to do is we don't want to risk more than $150, meaning 15 ticks on crude oil per one contract. So have a hard catastrophic stop of 15 ticks when you enter this trade at the close of this green bar. Once it closes green, you can open the position up. Now we got a hard catastrophic stop in the trade of $150 maximum loss. However, we're going to bring our loss down even more if we're wrong. I'm going to place a stop 2 ticks below this swing low where the swing is at 158 buy imbalance. So now my stops can be right around an average of 12 ticks. So on this last trade, I had a maximum of $120 risk on the trade. $120 risk is your average typically on crude oil. So once you enter it then, based upon high value breaking out, retesting, there's your blue Fibonacci dots. Remember, you're going to let market profile set it up, whether it be these black charts or J signal charts, either one. That's the first thing. Then we go to market delta to look at the inside the market and see if we're correct.
Order
Don't make it any harder than
canceled.
that. I have a very sophisticated, complex trading system. This algorithm is very, very sophisticated and complex how it's built, but it's very easy to execute because we're letting it do the work for us. We're not guessing where these trades are. We know the exact bar to get in every single day on any given market. So when we broke outside a high value, retested, had the blue Fibonacci dots. There's your order and bounce right there of 158. Once that closes, open the position up. Where do you get out? A lot of traders